So there's been some really, steep selling pressure. This week we saw 2 days in a row where the NASDAQ was up 1% intraday and finished down that same day down more than 1%. That hasn't happened since 2001, and I think people are just, trying to take profits where they can.
But do you think we're at a point looking at a possible 45% pullback in the S&P?
I think that's what everyone is trying to figure out right now. But as you mentioned, there have been so many calls for, hey, this bubble is about to burst. Didn't we hear that at the same time last year?
The problem, Joe, is that the Fed got stuck on this transitory call for way too long. It has fallen significantly behind. There's more risk out there to the marketplace and to the economy.
So I think the Fed only has to raise rates 4 times. I think it's certainly a non-zero probability that you get a recession in the later part of 2022.
Whoo-wee! There is no lack of FUD out there. That's fear, uncertainty, and doubt. Now, remember last week when I told you that even if you understand, generally speaking, the Wall Street mindset, trying to play the same game as them would get you burnt? This past week was the perfect example of that. What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So even though there were a couple of bright spots along the way that made it seem like we were stabilizing, all 3 major indices dumped hard on Friday. The Nasdaq is now formally in correction territory with a greater than 10% pullback since the year started. The SP 500 isn't too far behind either, with a nearly 8% drawdown since the year started. But the real story isn't how the indices are performing, it's how the individual stocks that you're invested in or considering investing in are reacting to the current environment. Again, this is all short-term noise and part of the process. Which brings us to the only questions you should be asking yourself, in my opinion, and that would be, should I use the opportunity to buy? And if so, what should I buy? In today's video, we'll check in on ChargePoint and where things currently stand with the stock. I'll share what I'm personally doing in light of where we are, and wrap up with what to look out for next week. Spoiler alert, you definitely want to brace yourself, but more on that later. As always, I recommend watching all the way through so you don't miss out on any pertinent information and the thought process behind it. Drop the video an early like if you haven't already, and hit that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. First off, notice anything interesting with the ChargePoint chart? That's right, it looks nearly identical to the overall NASDAQ chart I showed you earlier. The weekly decline of 10.62% was greater than the broader index, but what you need to pay attention to here is the overall year-to-date decline at this point. The stock has been trending downwards since the last week of November and is now down 30.60% year-to-date. So even though the NASDAQ, which ChargePoint is part of, has now just entered correction territory, ChargePoint itself has gone beyond a correction and is now in a bear market. That's 25% or greater for those of you wondering. If you recall, the decline started with ChargePoint missing on their bottom line, that's the profit metric. You can search anywhere and there really hasn't been any negative news tied to ChargePoint since then. On the contrary, they actually raised revenue guidance for 2022. They now expect revenue between $235 million to $240 million. For context, they reported $146 million in revenue in 2021 and $144.5 million in 2020. So as it stands, they're expecting to increase revenue or the top line by around 60% year over year. Their gross margin is also improving, and they're inking more and more partnerships like this one here with the city of New York to provide charging infrastructure supporting the transition to e-buses. They also have the one with TransLink in Vancouver, Canada. And let's not forget about them expanding their coast-to-coast DC fast charging network in the US, similar to the Tesla supercharging network. The bottom line here is this. Despite ChargePoint doing all the right things, the current microenvironment with soon-to-be rising interest rates and inflation concerns simply isn't conducive to pre-profit growth companies to thrive as far as their stock price is concerned. So should we sell and check back later this year then? Well, you could, but I'm not, and this is why. I've actually been waiting for this. If you watch my year-end transparency update, I already gave you the general themes for what will drive the market this year. If you missed it, go watch it, I'll link it here. No matter how you slice it though, the one simple reality is this. Last year was an extraordinarily profitable year for fund managers far and wide. Monetary policy is going to tighten, and the market is now trying to price it all in. No one knows exactly if it's going to be 3 rate hikes or up to 7 like JP Morgan's CEO Jamie Dimon is estimating. It's all speculation at this point. And until there is clarity on how tight the macro environment will actually get, the market will favor value stocks over growth stocks, meaning that institutional investors will go on the defensive and continue to sell high valuation growth stocks and sit on cash for the most part. Now, here's what I do know. ChargePoint is now 70% off its all-time high reached in December of 2020. The last time we saw price action at this level for ChargePoint was in October of 2020 pre-SPAC merger announcement. Also, ChargePoint was never expected to turn a profit until 2024, so no concerns there. And to date, they're still on track to deliver on that plan. Finally, EV adoption is accelerating, which means an ever-increasing need for EV infrastructure. This then brings me full circle to answer the question this video started with, which is it time to buy? For me personally, absolutely yes. I started the year with 500 shares, and my goal since 2020, when I first bought ChargePoint, was to hit 1,000 shares. I picked up an additional 200 shares between January 14th and the 20th. As a result, I was able to drop my average cost from a little over $24 to where it is currently. DCA, or dollar cost average, is your friend in down markets. I'm not investing for this week or next month, but rather where I expect the price to be a year from now and beyond. So similar to Virgin Galactic, my focus now is to lower my cost average as much as possible. Now, we've already established that the macro environment is what's pressuring the stock price lower at this point and not the actual company's performance. Therefore, the other variable to factor in is the analyst sentiment around the stock. At the close of the trading week, analyst consensus places the median price target at $28.90, which suggests a 118% upside from current levels. Lowest expected price is $20 by this time next year and $37 on the high end. Notice the lack of sell ratings here? Well, think about it. This is the #1 company in North America and in the top 5 in Europe for building the EV infrastructure, supporting the transition that is undeniably happening at this point. No one would recommend selling unless they had less than a 6-month time horizon or something drastic happened to change the outlook. That said, make no mistakes, we're more than likely going lower near term, and next week could see extreme volatility. Why? Earning next week will see major companies report. Monday we'll have Caterpillar, 3M, and American Express, for example. Those are names where fund managers love to seek refuge in periods of high volatility when growth falls out of favor. How those perform will be telling. Microsoft and Apple report on Tuesday, and how they perform could impact the sentiment overall around tech, especially if either one of them misses expectations. Tesla is on Wednesday, which you know I'll cover in next Sunday's video. You can check my Twitter for quick highlights till then. But the single most important thing to watch out for next week is the Fed Reserve meeting, which kicks off on Tuesday and will wrap up on Wednesday. So don't expect any rally to kick off on Monday, but rather more downward pressure until the Fed meeting minutes are released. At best, we'll stagnate and stay leveled. Those minutes could offer some details on when the first rate hike will actually hit and the magnitude of the increase. Despite the various narratives and the word recession increasingly getting tossed around, that isn't what's driving the market down. It's the lack of certainty preventing fund managers from deploying their cash in a meaningful way. So for now, most are staying in the defensive, trimming tech, locking in max profit, and adopting a wait-and-see approach while deploying a bit of cash here and there on too good to pass up opportunities. That will reverse once more clarity is available. The last thing I will leave you with is this. I may not be a financial advisor, but understand that fortunes are built in down and stagnant markets. That's precisely where we are right now. There's a reason the saying is buy low, sell high. And right now, ChargePoint is near its all-time low and in prime buying territory, in my opinion. Now, obviously, you'll have to consider your own time horizon as you decide what to do next. With that said, I'll leave it here for today. If you enjoyed what I had to say and found it insightful, be sure to smash the like button if you haven't already, and share with others. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on future content. As a reminder, I post every Sunday and as time allows, in week for more crypto-focused videos. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.